Welcome, everyone. As you navigate through the complexities of life, do you constantly find yourself trapped in a cycle of living from paycheck to paycheck? Do you ever wake up in the middle of the night worrying about how you'd handle an unanticipated financial burden? Do you fantasize about a life where money doesn't dictate your every decision or limit your options? Have you been endlessly searching for a roadmap to financial independence but just can't seem to figure out where to begin? Well, guess what? Your search ends here. Welcome to your ultimate financial sanctuary. This platform will act as your comprehensive guide for accessing and understanding the most effective investment strategies around. We are committed to simplifying the maze of financial investing for you. Our mission is to equip you with the knowledge and tools that will empower you to make well-informed and profitable investment decisions. Joining us, you're saying yes to a future where financial stability and independence aren't just dreams but a tangible reality. So before we delve into the fascinating world of investing, we urge you to click on the subscribe button. By doing so, you can ensure that you're always in the loop with our most recent video releases and the crucial information they contain. We are about to embark on an enlightening adventure into the realm of investing. And believe us when we say this is something you absolutely don't want to miss. So sit back, relax, and let's start your journey to financial freedom. Hold on to your hats, folks, because we are about to delve into a world of figures and percentages that might just blow you away. Are you prepared? Good. So let's get started. Ever pondered what the average annual return of the stock market has been since the 1920s? Has this thought ever crossed your while sipping your morning coffee or taking a leisurely afternoon stroll? Well, brace yourselves as we are about to reveal the answer to this intriguing question. Would you believe if we told you that, on average, the stock market has provided an annual return of about 10%? Yes, you heard it right. A firm, unequivocal, and solid 10%. That's indeed a figure to give you a pause. Let that sink. A decade-long period of time wherein the stock market has consistently outperformed various other investment vehicles. For a moment, let's draw a comparison. Think about the humble savings account that you and I both probably have. You know, the one that promises security, albeit with modest earnings. The average interest rate of a savings account is typically less than 1%. Now, place both these figures side by side. On one hand, the roaring 10% annual return of the stock market, and on the other, the quiet, less than 1% interest of a savings account. The contrast, the disparity, the sheer difference is staggering, isn't it? Now, onto the meat of the matter. The lure of possible significant yields has piqued your curiosity, hasn't it? Rest assured, you've made the right decision by landing here. Today, we unravel 5 comprehensive techniques to embark on your journey into the world of stock investments. As we commence, let's reiterate one crucial advice that resounds across the finance realm. Educate yourself. Education in this context signifies getting well-versed with the financial market and its various elements. A good starting point is to understand what stocks are. In the simplest terms, stocks represent ownership in a corporation and constitute a claim on part of the corporation's assets and earnings. However, merely understanding the definition doesn't suffice. One must delve deeper to understand how stocks function. It is essential to recognize that stock prices can fluctuate due to several factors such as company performance, investor sentiment, and overall market conditions. Moreover, stocks can be categorized into different types based on several attributes, like market capitalization, company's sector or industry, its growth patterns, and more. The key to navigating the stock market efficiently is to be a voracious learner. Immerse yourself in books penned by finance gurus. Tune into enlightening podcasts that simplify complex market concepts, and register for online courses that offer in-depth knowledge. Remember, more you learn, the better you can strategize your investment moves. Knowledge, after all, is power. The second step is to identify your clear, achievable financial goals. This step is crucial in your journey to financial freedom and prosperity. Perhaps you're asking yourself, What are financial goals? Well, they are essentially targets you set for the management of your money. Each person's financial goals are different because everyone's priorities and ambitions vary. Are you saving for a significant purchase like your dream home? This can be an exciting goal that gives you something tangible to work towards. Envisaging the pride of owning your own home, the joy of hosting friends and family, the comfort of knowing you have a safe, secure place to call your own. Or are you perhaps setting money aside for your retirement? This is a long-term goal that requires consistent and smart investment. Visualize a future where you can enjoy your golden years without worry, taking up hobbies and leisure activities, or maybe even traveling the world knowing that your financial needs are covered. Alternatively, you might simply be looking to grow your wealth. This can be an open-ended goal that allows you to explore various investment opportunities. Whether it's stocks, bonds, real estate, or startup investments, the possibilities are endless when your aim is wealth accumulation. Each of these goals might necessitate a different investment strategy. Some strategies might be high risk, high reward. Others might be slow and steady. Diversification, asset allocation, and risk management will all play a role in shaping your strategy. So it's vital to know what you're aiming for. Thirdly, consider starting with an index fund or an exchange-traded fund, otherwise known as an ETF. If you're new to investing, this is a perfect place to start. What makes these funds attractive? Let's break it down. By nature, they are designed to hold a broad range of different stocks. This could range from top tech companies like Apple and Microsoft to retail giants such as Walmart or Amazon. The beauty of this is that it gives investors instant access to a diversified portfolio. Diversification, in essence, means spreading your investments across various assets. Strategy effectively reduces the risk of your investment. Imagine if you invested all your money in one company and that company suddenly goes bankrupt. You would lose everything. But by distributing your money across multiple companies, the risk is significantly reduced. This approach to investing is backed by some of the biggest names in the industry. One notable advocate is Warren Buffett, a self-made billionaire who is often referred to as one of the most successful investors of all time, has publicly spoken about the benefits of ETFs. Particularly for those who are just starting their investment journey, Buffett stresses the importance of these funds. In fact, he specifically recommends them for beginner investors. So if you're just getting started, or even if you're looking to diversify your existing portfolio, consider ETFs. They offer a simple, efficient, and low-risk way to invest. Remember, the goal here is not to make quick money, but to grow your wealth steadily over time. Warren Buffett, one of the most successful investors of all time, recommends them for beginner investors. The fourth piece of advice: don't be afraid to start small. Some might think you need thousands to start investing, but that's far from the truth. Many online brokers now offer the option to buy fractional shares, allowing you to start investing with as little as $20. Last but not least, remember to stay patient and disciplined. Investing in the stock market isn't a get-rich-quick scheme. It takes time. Don't let short-term market fluctuations deter you from your long-term goals. In this journey of financial freedom, it's important to note that your investment strategy isn't set in stone. As you gain more experience and your financial situation evolves, you may need to adjust your strategy. Maybe you'll be more comfortable taking on risk, or perhaps you'll want to diversify your portfolio further. Remember, the key to successful investing is adaptability. So, regularly review your investment goals and strategy, make necessary adjustments, and ensure that your investments align with your financial goals. So, there you have it. 5 key strategies to start investing in stocks. As Benjamin Franklin once said, an investment in knowledge pays the best interest. So, equip yourself with knowledge, set your goals, start small, remain patient, and watch your wealth grow over time. Remember, the journey of 1,000 miles begins with a single step. Take that step today, and who knows? You might just be setting yourself up for a future of financial freedom.